Welcome to Valuations and Succession Planning for Car Dealers, where two industry experts take a deep dive into the world of dealership valuations and the strategies that can drive growth and success. In this series, Dan Iosue, a succession planner with the Rawls Group, and Scott Womack, Senior Vice President of Mercer Capital, will cover a wide range of topics, including the fundamentals of valuations, industry trends, best practices, and common challenges faced by car dealers. Here we go.
We talked in other episodes about value. Obviously, the conclusion comes in a number, but what are those components that dealers should be aware of that can contribute or cause a reduction in value? First and foremost is brand or franchise, right? Not all dealers are created equal. So a Porsche dealer is not worth the same as a Ford or Chrysler. It's interesting working with clients. I had a litigation auto dealer client who I would have pegged to be sophisticated, and as dealers are wont to talk to each other, they're always keen to share data points with us in the valuation process. And so he said, "Hey, I was talking to a dealer down the street, sold for 10 times. Where do you think you're coming in on value?" And it just so happened this particular client was a Chrysler Dodge Jeep Wrangler dealer. When I investigated the conversation a little bit more, it turned out his dealer friend down the street was a Porsche dealer, and I had to sadly break the news to him that his CDJR dealership was not worth the same as the Porsche dealership down the street. So franchise and brand is very important. Real estate, sort of quality of facilities are important. Most of the entities that we work with, there's the operational sort of dealership entity, and then there may be a related party company that owns the real estate. So the value of the real estate may not have an impact, but the overall quality of the facilities, have they recently done rebranding or imaging? Do they represent a manufacturer that has electric vehicle requirements? Where are they along that process? Employees and management, right? So, how do we have a quality GM? Do we have management depth? One of the talking points in evaluation where we sort of assess risk is, how much key management risk is there either with the dealer principal or with the employee group? In other words, do we have a deep bench of management, or we, glaring deficiencies of whether it's a service writer or heads of certain departments that we need, that can have an impact. Can't ignore recent economic impact. So, dealership world's been crazy the last 3 or 4 years. We obviously had initial declines early on in COVID, and so that was a challenge. More recently, we had, high profitability due to kind of inventory shortages and chip crisis that shifted the balance between supply and demand, and dealers have had some opportunity to realize and experience heightened profitability. So certainly that has an impact on the valuations and can be a value driver. We talk about deal flow and buyer demand. So in periods where there's a lot of activity out there, the presence of buyer demand can create extra value for a particular dealership. And then not ignoring location and markets. We talked about franchise and brand, but where are they located? Are they in an urban area? Are they in a rural area? Are they in a high tax state or a low tax state? So these are just some of the things that when we assess the overall value of the dealership, clearly the numbers and profits are important, but these are some of the other things that are important as well. Dan, what are your thoughts on those?
Well, it's really interesting to hear your perspective, Scott, because those are I think that in doing what you do specifically, it's on the valuation side. It's very interesting to hear, like, okay, we know within a single dealership, what we're looking at, as far as brand and what the current market is for the brand, and revenue and multiples, and the things that kind of are, I'd say, surface level and talked about pretty commonly. And there are a lot of conversations, I know, from a succession planning standpoint on some of the differentiators there within brand. And if we're talking about multiple locations, of course, like diversity and hedging against what's happening in the automotive industry, and the change, if you will, or the pending change or the forced change, however you want to look at it, it's change, and it's it's not optional. The growth part is optional. The change part does not appear to be optional. So I know there's a lot of conversations from a succession standpoint on diversification. in brands, certainly a lot of conversations about their diversification in location, while also being, I think, intelligent about your footprint, and extending your resources and your people, and the impact that your footprint has on your certainly overall value. And then you mentioned, the rural markets versus metro. What's the runway look like there for EV and and again, that hit on that diversification, between those two types of markets. And then again, on the we're headquartered out of Florida, so and work all over the country. Certainly, Florida is such a hot market for so many reasons. It's a high growth. We're getting a ton of people moving here every day. It's tax efficient from an ownership standpoint. So it's a hot market, on the buy side. So yes, so certainly location, and I think most importantly from a succession standpoint, where we can have the most impact is on the people side. You brought up the people. What's the bench look like? Do we have a single point of failure here that has a significant impact on the value? Basically, who are the people today that are responsible for the success we're having on the key management team? And then who are the what do we have in play? What retention structures and incentives and other sorts of growth opportunities do we have in place for not only those people who are your current key leadership team, but what about the next generation, or the people the bench beneath them? How are they positioned, not only to keep the current business firing on all cylinders, but a lot of our clients are in growth mode. If we're in growth mode and we're looking to acquire, how are we going to ensure that our culture transitions into a new dealership? And more often than not, that's through our people. So we have to have the people to drive that cultural initiative on the front end and be ready to do that. So there's a balancing act there, right, between having the bench ready to roll and ready to go, and having the space for them to actually move up. And it's a good problem to have. But so most of the impact, or say sort of day-to-day driving that we're doing on value is through the people, and through working on strategic initiatives and identification of rising all stars, and putting a process in place to nurture them.
And Dan, I think you make an excellent point. When you mentioned footprint, you were, I think, among other things, talking about diversity, which is an excellent point. It makes me think of something I didn't mention. Some of the value driver can be, we mentioned location and market in terms of urban or rural and the state, but also how close in proximity are you to other dealers of the same franchise, right? Is it a single point market? Is it over franchise? Mm-hmm. That can have an impact. And then one of the things I tell clients all the time, this is a very unique industry, abnormal for the valuation profession, but sometimes, not always, underperforming dealers can actually be worth more than overperforming dealers. And it's because of the assumption that an underperforming dealer, if the right person were to come in, they might look at the set of financials and figure out, if actual earnings are X, I can come in and do some things well, and expected ongoing earnings are a little greater. It might have a little greater value than maybe what's sort of present at the current.
Yeah, that's a great point. And in fact, was just with a client earlier this week that has been in growth mode for years, and we're over well over 20 rooftops, and we were talking with him about what he's looking for, given the current market, and it's a lot of those things. Where do I have the most potential, for growth, both in brand and in potentially underperformance as it relates to his market and his footprint. And it's he brought up diversification, which brands he thought made sense within his total portfolio, if you will. and who within, sort of that buy box represents, an opportunity and has potential. So whether on the market or not. So from a value standpoint, that's what he's looking at.
Well, and one of the often overlooked sort of value drivers or factors is how well does a particular brand fit in a certain market, right? So Texas obviously is a truck market. Colorado is sort of that SUV kind of hybrid market. And so if you're a sedan dealer in Texas, are you as successful as a truck dealer? Probably not. So I think kind of brand fit to the market and also the demographic, are you had a case along many years ago involving an ultra high line, and the ultra high line, you're talking Lamborghinis, Rolls Royce, things like that. Again, the obvious would be that would do better in a Los Angeles or South Beach, Miami. You may not do as well in a smaller metropolis. So I think brand fit to your market is also a value driver for this industry.
And that's another great point. Along those lines, same conversation that I mentioned earlier. As far as diversification goes, the way this particular client is looking at the business and the industry is to maximize within each location, to maximize the automotive opportunity on that specific footprint. And what he's talking about is we've got new car, obviously got the things that we know, new, used, et cetera, but also collision, car wash. How do I add the most value and diversification within a specific location, and do that efficiently and economically, because it further protection against the volatility of the industry. And I thought that was a certainly worthy and unique point of view as well.
This is only one out of our 12-episode series focused on dealership valuations and the strategies that can drive growth and success. Continue listening to the series now or come back for more. Each topic featured may want you to learn something new. Succession planning allows you to create more control over the future you envision by proactively addressing possible, probable, and potential issues impacting your goals. Do you have a question you want to discuss with an expert? Feel free to reach out directly to Dan or Scott at the email addresses listed on the screen. Valuations and Succession Planning for Car Dealers is a part of the Rawls Group's Advancing Your Business, People, and Legacy Conversation series.